Calculating interest, tax, and dividends paid. So far, we have just assumed that the amounts for interest, tax, and dividends for the year have in fact been exactly the same as the amounts that were paid during the year. However, this is usually not the case, as there are balances owing at the beginning and ends of the year. Interest paid can be calculated as follows. You can either use a T account or you can use your logic to work it out. Either method is acceptable, as long as you make sure that you arrive at the correct answer. If you use a T account, create an account for the interest expense. Show the accrued expenses reversal at the beginning of the year on the credit side, as that is the amount that was owing for interest. At the end of the year, you would show the adjustment for the amount that is still due at the end of the year. If, however, you were doing a logical calculation, you would show the amount at the beginning of the year as an outflow because one would assume that you have paid it. However, the amount owing at the end of the year is an inflow as it has not yet been paid. These figures are the amounts that you would have received from the statement of financial position shown in accrued expenses for interest. Next, you will look at the statement of income in order to determine the interest for the year. If you are showing this in the T account, you will show it as the profit and loss amount, which is closed off on the credit side of interest expense. For a logical calculation, you will assume that this amount would have been paid and therefore show it as an outflow. Lastly, you can calculate the amount that was actually paid as the missing figure. Either in the T account, it would be the bank figure that would have been shown in the interest expense account, or in the logical calculation, it is the end result, which would be an outflow of cash, one would hope. To calculate taxation paid, you do something very, very similar. However, this time, the T account that is useful is your SARS income tax account, showing the amount that was owed to SARS during the year. Your amounts from the statement of financial position at the beginning and end of the year are shown as your balances brought down. In the logical calculation, just like you did for interest, the amount owing at the beginning of the year is shown as an outflow as you assume that you owe it, and the amount at the end of the year as an inflow as you have not yet paid it. For SARS income tax, remember that there are times when we overpay provisional tax, and as a result, SARS may have a debit balance at the beginning of the year. If this is a case, the T account is certainly an easier one to use. You simply show this beginning balance on the debit side or the end balance on the debit side, whatever the case may be. If, however, you're using a logical calculation, it is a little bit more difficult to think about. If you had a debit balance at the beginning, you would have to show the amount owed at the beginning as an inflow of cash, and if it was a debit at the end, you would have to show this amount here as an outflow of cash. Because this can be confusing, personally, I much prefer to use this T account than the logical calculation, but you need to figure out whatever works best for you. You can then show your income tax figure as taken from the statement of income and show it either on the credit side of SARS, because that's where you would enter your income tax, or show it as an outflow in your logical calculation. As before, you can then calculate the actual cash amount paid, either as a debit in the SARS income tax T account or as the answer to your logical calculation. Dividends paid works in exactly the same way. However, in this case, I would suggest you create the shareholders for dividends account with one slight adjustment. Assume that your interim dividends also went through this account. In other words, you show your total dividends in shareholders for dividends. Alternatively, you can show them separately, but you would then have to add them together later. So this is a much faster way of doing things, especially when you are simply working with rough T accounts. As before, show your beginning and your end balances, either as credit entries in the shareholders for dividends T account or as firstly an outflow and then at the end an inflow of cash in your logical calculations. The dividends amount for the current year will be found looking at your retained earnings note. This note could of course also be called accumulated profits or retained income, all meaning exactly the same thing. But in this note, you would show the total dividends that were actually calculated for the year. In other words, your interim dividend that was paid plus your final dividend that would have been declared for the year. You can then calculate your bank figure as the missing amount. Keep in mind that if you are looking at dividends, your final for the current year is in fact the same as your balance brought down at the end. So if somehow you are actually given part of this information, you can work out your interim dividend as the missing amount here. Your bank figure, if you're told your interim dividend, is simply the interim dividend plus the shareholders for dividends at the end of the year. The other thing that you need to keep in mind is that when you are calculating the change in debtors and creditors, up until now, you have already used the changes for SARS and for shareholders for dividends as part of your changes in trade and other payables. However, if you have already used them to calculate tax and dividends and interest paid, you need to then exclude them from this calculation. You're going to include all your other accruals, however, in this change in debtors and creditors. So, when you are working out your change in debtors and creditors, you will use your trade debtors or your trade creditors, as well as your expenses and incomes accrued, as well as, for example, SARS for VAT or PAYE. However, you will only exclude the amounts that you used in calculating interest paid, tax paid, and dividends paid. Other useful T accounts that you would need to use would be tangible assets at carrying value. We don't usually show tangible assets at carrying value. Instead, we have a cost account and we have an accumulated depreciation account. However, we can calculate the two together by showing a total tangible assets account, which is very useful for working out either the amount of assets that were bought or the selling price of items that were sold. You would include in here your depreciation. You would show your fixed assets that were bought. You would show your fixed assets that were sold. Whichever one of those are not given will then be your missing figure. Obviously, your beginning and end values at carrying value would usually have been given. The other thing that is very useful to use is your retained earnings T account. Basically, you use this account showing your dividends, your tax, and your profits for the year. Although these amounts would be shown in actual fact in your appropriation account, they all have a bearing on your retained earnings. Your retained earnings beginning and end balances are given in your statement of financial position. And so when combined with your dividends, tax, and profits, you can then recreate the overall effect. And any one of these that is not given can be worked out as a missing figure. Let's have a look at example 5.7 to illustrate all these rather complex points. The first thing that we are going to do is we are going to calculate our interest expense paid using the interest expense shown in the statement of income. Notice that we only need to use the current year's figure of 3,000 Rand. The 2,500 Rand that may have been given from last year is in fact irrelevant. Do not let it confuse you. For taxation, we will pull the amount off the statement of income. Again, we will use only this year's figure on the credit side of the SARS income tax account or as the amount given in the income statement. We then can see in trade and other receivables that SARS had, in this case, an amount owing by SARS to the business of 1,500 Rand. Notice that this is a debit balance brought down for SARS. This is where I really like to use the T account instead of the logical calculation. In the logical calculation, you would have to remember to remove the brackets. Now, because we have already used our SARS income tax amount over here, when we are calculating it, simply cross it out. I seriously would suggest take your pencil and your ruler and cross that line out so that you no longer use it. Then what you do is you take the remaining amounts, in this case, trade debtors, accrued income, and prepaid expenses, and recalculate your new balances at the end. You can then see very easily that the change in debtors was in fact a decrease of 1,050 Rand, or in this case, it was an inflow of cash. When you come to your accumulated profits note, which remember could be called retained earnings or retained income, your ordinary share dividends is given here as a total of 80,000 Rand. This will be shown in your shareholders for dividends T account on the credit side for dividends, or as dividends during the year in your logical calculation. Over here you can see that the recommended amount of 50,000 for this year and 30,000 at the beginning of the year can now be shown as your beginning and end balances in shareholders for dividends. Out of interest, you will also find these figures in trade and other payables. But if you are clever enough to pick it up now, it will speed things up, so you might as well enter it here. In addition, because you were given last year's final dividend and this year's interim dividend, you can actually use that as part of your calculation for the dividends paid as a shortcut if you wish. Your amount paid is shown as 30,000 Rand in your accumulated profits note, and so it can be helped for your shortcut to show that the total dividends actually paid was in fact 60,000 Rand. But maybe you are not so lucky and this is not given. So let us continue with the other information you may need to use. When you look at the trade and other payables note, you will see that your accrued expenses for interest on loan is given here. Because we have to show interest paid, we can use the beginning balance of 200 and the end amount of 250 and show them as the reversal or writing back of adjustment at the beginning of the year on the credit side, and the adjustment made at the end of the year on the debit side, as shown here. Alternatively, in the logical calculation, the beginning balance is shown as an outflow of cash because you would have paid it. The end is shown as an inflow of cash as it is still owing. We can pick up the income tax, SARS owing 12,600 Rand at the end of the year. The reason that there's no balance owing at the beginning of the year is that, remember, it appeared in our SARS receivables as SARS owed us money at the beginning of the year. Your 12,600 is then shown as a balance on the credit side at the end of the T account, or an amount owing at the end of the year in the logical calculation as an inflow. Notice here in the logical calculation, both the beginning and end amounts are shown as an inflow. Remember that that is simply because the beginning amount was a debit, which is unusual. We are then given the shareholders for dividends amounts owing at the beginning and end of the year. Again, you might remember that these were in fact given in the dividends in the retained earnings note for dividends as the recommended amounts at the end of the year. So in fact, we have already shown these in our tier cards and logical calculation. However, this serves as a double check just in case you missed it earlier. Now that we have used interest on loan, SARS income tax, and shareholders for dividends, we can look at all the rest of the remaining figures and recreate new totals, which end up as 28,000 and 25,000 respectively for the current year and the beginning of the year, resulting in an increase of 3,000 Rand, which is in fact an inflow of cash. Notice that again, I excluded the amounts for tax, dividends, and interest that have already been paid. Now please go and do exercises 5.8, 5.9, crossword 5.10, exercises 5.11 and 5.12, and the summative assessment 5.13. As you can see, this will take you some time. Don't expect to do it all at once, but please do remember to check yourself after each and every exercise. Well done. You now should know how to draw up a beautiful statement of cash flows.